Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today, we're going to take a long-term outlook at SP 500 to see when I think this rally could potentially be over, what to look for, and all that kind of good stuff. So, right here, what we're looking at before we get to the real long-term time frame, which would be the weekly chart, we're going to look at the daily chart because coming back from when we had these lows back down in March of early this year, you can see prices just started making these Elliott wave 1, 2, 3, 4, 5 moves. So then you have 0, 1, 2, 3, 4, 5. Came back, hit the 30% line, and that's enough to complete it. So now, ever since when did it complete? Back there in middle of May, we're looking for another 5-wave move to happen. So you can see from like right here, what we'd have would be the 0 point. There's the 1, there's the 2. And this was looking like it was going to be the third point, but when it came down and broke down in this one wave right down here, broke that line, it's invalid. So what you have to wait for is another high, which it did create up here. But now what we're waiting for is price to retrace back down. You can see to the 38% line right here at about 35, 38.50 from where it's at. But it hasn't gone down there and hit it yet from these highs. It keeps on making highs, and we just keep on moving up the Fibonacci retracement level for it. So we're waiting for that to go and hit. And then once it does that, we're looking for the move to continue back up for it. But as you can see, back from the last, what's this today? 1, 2, 3, 4, 5, 6, 7, 8 days. The 21 EMA, 21 moving average, has just showed that there's a lot of buying down there from it. And so eventually we're waiting for, on the daily chart, a pullback from this to see if this full Elliott wave, which would be down here, 0, 1, 2, 3, assuming that could be the high, and then somewhere down into here, assuming it doesn't break down into the low, 3, 4, and then 5 going up here, and just like that. So that's what we're waiting on here for the daily chart to see if that develops. So the good news for the bulls is longer term, we're just looking for a bullish setup. There aren't any short setups here in the S&P 500. And that is looking for the daily chart right there. Now, for the weekly chart, this is something I've gone back and forth on for a while now. Let me delete some of this stuff to make it a little bit easier to see here. Yeah, we'll get rid of that and that. And I will keep that. All right, so backing up here a little bit, ever since this is how much data TradingView loads for it. Ever since 1998, it's pretty much been 1, 2, 3, 4, 5s. You can see 0, 1, 2, 3, 4, 5 move, 0, 1, 2, 3, 4, 5, 0, 1, 2, 3, 4, 5, extended move up there, one back down here, and then ever since the financial crisis lows back here in March of 2009, it has been one huge 5-way move up that has not been completed yet. And what let's see here. So right now we're still in there's 3, we're still 4, we're still in wave 5 right here. And what we're looking for is price to hit about 3,800 here in the S&P 500. When it does that, that is when that's what we're looking for. So I'm trying to collect my thoughts here. That's what we're looking for this 5th wave move to solidify that this is the 5th wave move. Then eventually we'll be looking for the pullback. And there's 2 ways I do that. I'll talk about that here in just a second. So it still has a little bit more room to run. Obviously, price is at 36.79. So at minimum, we're looking at 3,800 for it to hit up there. Now, of course, it can go higher. It can go much higher than that. But once it hits that 3,800 mark, for me personally, I will be looking at taking profits in some of the stocks I have, in whatever else, long-term investments for it, just because I think we'll see the pullback eventually from that level, starting with somewhere after the 3,800 level for it right there. And then I'll be looking for the pullback and to get in eventually down there. Now, I'm not saying it's going to happen as soon as price hits at 38. It probably won't happen, but eventually it will happen. I just obviously don't know exactly when it's going to happen. So one of the ways I look for it to see where a potential turning point could be is down here. Here's the 0 right there. There's the 1. There's the 2. what I do is I draw a Fibonacci extension level from the first wave to second wave, or second wave to first wave, moving up. And what I've noticed a lot of the time is price, when it's the fifth wave, will bounce off of the 6.85. It says negative on here because when you go the opposite way, you have to subtract a 1 for it to make it like it'd be the positive way. So it'd be the 6.85 Fibonacci extension level. And let me just show you real quick how I got that here real quick. I have a little Excel sheet. So how I got these Fibonacci levels is all I did was, if you look at column S and T right here, so using the 1597, if you want to look down here at A19, that's just one of the Fibonacci sequences right there. All I did was divide it 1597. You can do this with pretty much any of the Fibonacci numbers. So I just took one of the Fibonacci numbers and divided it by the Fibonacci sequence right here. And as you can see, let's see if I can zoom in a little bit over here, make it a little bit easier to see. So as you can see from over here, you start getting 1.418, 0.236, 0.38, 0.618, 1, 1.68, 2.68, 4.23, and then we have the extreme extensions: 6.85, 11.09, 17.88, 29.03. The highest I've ever seen this go for these moves is 17.88, and that is really rare. Typically, when price extends to 11.09 right there, that's when you can expect a pullback almost every single time from what I've seen. And this one's pretty accurate as well. When it starts getting into here, the market is either extremely overbought or oversold. So it still can go up some, but this is definitely a turning point area to look for when it's in the fifth wave. Now, in this one, for instance, this is still the third wave right here. When it hit the 6.85 right here, and it has already hit the 11.88 area, and it still hasn't reached its initial target at 3,800. So this is just an extremely big move right here. So the next turning point area would be all the way up here at 17.89, which would be 48.31. But will it get up there? I don't know, but that's if it does get up there and you're still in. If I'm still in, I'll definitely be taking profit. I'll definitely be taking profits from that area up there all the way to at 48. But since price is already is going to surpass the 11.88 area for it before it hits the 3,800 area, that's why I'm starting to protect myself and taking any profits I have. So when the pullback eventually does happen, one thing to look for when it hits this yellow box area up here, I look for price. One of the ways to look for the pullback to happen is for price to close below the 21 EMA right here. Now, this doesn't signify every single time price is definitely going to go down when that happens, but it does help create a filter for it to where you're trying to, or I'm trying to get in at with the momentum on my side when price is in a potential turning point area. So you have it hitting up here, confirming the fifth wave when it hits at 3,800. Price is already well above even the 11.89 Fibonacci extension area right there. So I think it's setting it up for sometime in this area, a decent sized pullback for when this is going to happen. Obviously, if price goes up to 4,800, yeah, I will have gotten a little bit early, but it is what it is. But let me show you what I'm looking for the pullback area, or what I'm looking for the retracement to come back down to. Rats. So assuming price comes up in this area somewhere, so we'll say it gets to about 39.50ish or something like that. What I'm looking for is for the retracement to come down to at minimum to, and I'll tell you what, let me go out to a monthly chart just to make it a little bit easier to see. What I'm looking for is price to come down to the 38% line. So say it just hits right off of around 3,800, that would put us around at minimum at about 27.37. Now, price still can go lower than that. Of course it can. It can go down way lower than that. But that is the target I'm looking for this five-way huge move that's been going on for, what, 12 years now? Over 11 years, to go down to that level, to 30% line. So assuming it did today, which it would be considered complete up here, this five-wave move, just as an example, I look for a minimum of about 26.89, 26.90. Make sure this thing is right on there. Let's see here. Yeah, 26.84.50. But somewhere along up in here, my prediction is price is going to turn, and what we're looking for is a retracement down to, at minimum, the 38% line. So when price hits that, it could continue moving back up, but that is the area, that's the type of gap and type of minimum for the retracement I am looking for. So that's why with my longer term investments, with everything that has been pretty much going up, if you had bought any time along this here in the S&P 500, even if you get out early, I'm looking for the retracement minimum to come down to, say price does come up all the way up here to about 48.26, which would be the 17.89 extension level. Still looking for price to come down at a minimum of to where it would be about 3,365 here in the S&P 500. So that's what I'm looking to do when price hits north of the 3,800 S&P level right there. One way to play it is just get out right when it does that. I'm probably not getting out right when it does it. What I will be looking for, though, is a retracement, and definitely it closes below the 21 EMA. Definitely getting out of everything there. But price first has to go hit up here in the yellow box. So that's the long-term outlook for this P500. I do think we have at minimum a little bit more upside to go, at minimum to the 3,800 line. And then after that, we'll just have to see how much higher price goes before the eventual retracement does happen here in the S&P 500. And the minimum level we're looking at for it to trace to would be the 30% line, and say it just hits around the 3,800. That'd be about 27.35, but it just depends on how high it goes before we get the retracement. So anyways, that's that. Have a Merry Christmas, and talk to you later. Bye.